Okay, thank you very much for joining this session. Um, for those who haven't watched the video about my strategy, about how I trade supply and demand, I'll give you a little overview about my strategy and how I see the market, how I trade using supply and demand, which is pretty much the same thing like order blocks. It's the same thing pretty much. So basically, we have different types of entries when using supply and demand. However, I only trade two types. I trade momentum trade, which basically means trend trading, and I trade realignment setups. And what I look for, the first step of this strategy is direction or trend, and I look my direction and trend using the weekly and the daily time frame. If both are going in the same direction, then I drop to the 4-hour time frame, the 1-hour time frame, and 5-minute time frame if possible, so I can increase the risk reward ratio. So that's basically what I do. But I don't look for direction. I don't look for trends in the retail way. What I do is I use order blocks or supply and demand. So basically, if I see an uptrend, to me means supply zones being removed on the weekly and on the daily time frame, and demand zones being respected. So if I see the same behavior on the weekly and the daily time frame, that's what I know that I will have some setups and some opportunities coming up. But if the weekly is up and daily is down, I just ignore the pair. So that's basically how I trade. That's basically what I do. I just look for that direction using the weekly and the daily time frame. And yeah, I use a little bit of price action, like trend lines, support and resistance, not to place my entries, but to know where the liquidity is. So that's basically the strategy. Looking for direction, looking for a trend market, for a trending market. And if I have a trending market, then I go long or I go short, depending on what's going on. So that's basically the strategy. First, we look for direction, then we look for supply or demand zones going with the trend. Then I apply a confirmation pattern, and then I place my entry. So let me give you an example. Let me give you the breakdown of the signals I shared this week with the team. The first one was Aussie dollar, I guess. Yes, Aussie dollar. This was the first one. We took that short from here to here, and I'll give you the explanation and the breakdown. So yeah, let me remove everything from the chart. And if you see this uptrend right now is about to the market is about to switch from a bullish environment to a bearish environment. That's what we have right now. If price keeps pushing the price up, then we will continue looking for buy opportunities. But by the time I send the signal, we were in a bearish market scenario. See what we have. We have a trend line. This is a weekly trend line. This trend line got removed. Okay? But not only the trend line, the last demand zone, the last weekly demand zone got removed. So this is telling me that there are no more buyers. Now the sellers are stepping in. Since I have this demand zone being taken out, I know I'm in a bearish market right now using the weekly time frame. But if I go to the daily, see what's happening on the daily. We have a demand zone here being taken out, and we have two demand zones being removed. Using supply and demand rules, when we have two levels being removed, that means trend. So basically, I have direction here. I have direction using the weekly and the daily time frame. So since I know we are in a bearish market now, I will use the daily order block, which is up here. I'm gonna use the weekly order block, and I'm gonna use the confirmation pattern. Let's use the bar replay mode. So this was the market on the 16th. Let's see. Oh, today is the 29th. Now let me see. This week started on the 26th. Okay. So here's where I dropped to the 4-hour time frame. Here's where I dropped to the 4-hour time frame. So I have a bullish market on the 4-hour time frame, approaching a daily supply. And keep in mind that we are in a bearish market right now. All right. So what do I look for an entry? I look for a confirmation pattern, which is the same thing I look on the weekly and on the daily. So I have an uptrend on the on the 4-hour time frame. We have an uptrend here. Price keeps making higher highs. Okay, so I update my trend line, and this is a demand zone. All right, this is a demand zone. So if this demand zone gets taken out, I can go for short opportunities. Now we have another demand zone here. Okay, and I have this trend line. So this is the demand zone, and I need to be, it has to be removed for me to go short. So see what happens. Now this demand zone didn't hold. This demand zone didn't work, or this order block, however you want to call it, didn't hold, didn't work, and the trend line got violated. And I have one complete candle outside the trend line. So if you see, we go from the weekly, which is down or is bearish, daily is bearish, and see what's happening on the 4-hour time frame is bearish also. So I use those 3 time frames to look for direction, and once I have direction in all 3 time frames, I use the H1 for me to look I use the 1-hour time frame for entry. That's basically the strategy. So I have the confirmation. I see that the 4-hour time frame, became bearish, and see we have order blocks here. We have this order block, and we also have this other order block up there. All right, here. So which one should I use? That's the most common question I always get from the community. Which one should I use? I have this order block here, and I have this order block, this swing high, or this CP. I know this as a peak, and this is a CP. That's how we call it using supply and demand, but you might know this as a swing high. So which one should I use? I always use the reaching of the move. Where did the whole movement started? Up there. So that's where the money is. That's where I will go for short opportunities. So see what happened. I place my pending order. I sell that signal, that sell signal. People might start thinking, oh my God, the price will never retrace. But see what happened. This CP didn't work. Why it didn't work? Because the whole movement started up there. It didn't start here. It started here. So that's where I place my sell entry, and boom. We go from zone to zone. This is my take profit. You can use this as your take profit 1, take profit 2. And we have some sort of support and resistance structure, which you can use as well around here, around this level. Resistance. So I know that there should be liquidity below here. So liquidity is always above a resistance, below a support. So if this is a support and resistance structure, support and resistance traders might start adding positions, might start adding longs here. Why? Because this is a strong push to the upside, and what was your resistance now is supposed to become your support. That's what the rule says, right? But see what happened. Boom. That was my this is the take profit 3. Did you guys get the whole idea of the strategy? It's pretty simple. What I like about this strategy, and it took me a few years to trade this way, is that it's a very mechanical way of trading. I actually have a checklist here in front of me that I always use before I place a trade. So I need to look for the exact same patterns over and over again, the exact same patterns, and then place the entry, execute the order. So that was the first one. The second one I shared was OCCHF, which the other position hit my break even, hit me at break even, but it was the same thing. We are in a bullish market. Why? Because demand zones are being respected, and if you see to the left, supply zones are being removed. So that means a trend. Please note that I don't use the structure patterns like higher high, higher lows, higher high, higher lows, higher high, higher lows. We might have the same bias most of the time, but there are scenarios where we are seeing different things because I use order blocks. That's what defines my direction, no higher highs or higher lows. So I have an uptrend on the weekly time frame, and if I go to the daily, you see this is my last demand zone, and this is still there. This is still fresh, has never been tested. So what did I do? I need to go to the 4-hour time frame and look for confirmation pattern. I need to look for the exact same thing. I want the 4-hour time frame become bullish also. Where did it become bullish? Here. Why? Because the trend line got removed, this supply zone got removed. That's good enough. So now, where is the entry? Where did the whole movement started? And I know this is gonna help you guys to always use the correct order block, no matter how which strategy you're using. If you use smart money concepts, I know this is gonna help you a lot, because where the money is where the whole movement started. Okay, so here is where the whole movement started. Here, this is the order block. And if I go to the 1-hour time frame, let me use this candle, this black candle to the wick, and we go from zone to zone. Being honest with you, I was expecting this the price to go higher. Why? Because we have a resistance level up there, here, almost equal highs. So I was expecting the price to go up and remove this resistance level, but didn't happen. The price just hit my first TP, which is from zone to zone. It gave me a fast 2-to-1. I think this was the signal. 2-to-1 here. From zone to zone. This is my last supply zone. That's where my first TP will be. The second TP will be any support or resistance structure, or the most closest or the closest opposing zone. All right, but the price started to consolidate, and then it ended up removing the order block. But we can still look for buy opportunities as long as this daily demand zone works. So basically we had around what? Let me remember, because it was like It was around 50 pips, I guess. 50. Yeah, 3 to 1. Was good. And then we have 2 to 1. So we are up. Well, I'm sorry, we are plus 5R for the week. And then gold. This one fell, but it's the same strategy. The exact same thing. We are in a bullish market, still in a bullish market. Don't get confused because I don't use the structure. Maybe you might think this is a bearish market right now because we have lower lows, lower lows, lower lows, and all that. But if you see this demand zone, this is the last demand zone. This is still there. It hasn't been removed. So to me, we are still in a bullish market. So see what's happening. We go to the daily. The daily turned bullish as well because this last supply zone got removed, and we had a daily trend line here which also got removed. Good enough. We're good to go for a buy. I go to the 4-hour time frame, apply the exact same thing, see what we had here. Let me use a replay mode. This was my last supply zone on the 4-hour time frame. My last supply zone, so I just needed to wait for a confirmation pattern. We look for the 4-hour time frame to turn bullish also. There we have it. So I go to the 1-hour time frame, but this one hit stop loss. Here is the origin of the move, but this hit the stop loss. Now it's going up, but it hit my stop loss. So we have minus 1R. For the week, we are plus 4. Using just 3 trades. Simple. So that's how I trade. That's how I trade. I look for the same patterns. I look for the same exact strategy. I go from weekly to the 4-hour time frame. Sometimes I go to the 5-minute time frame, and I apply the exact same concepts in the 5-minute time frame because the order block will be a lot smaller and the risk-reward ratio will be a lot higher, and that helps me a lot when the opportunity comes up. So that's basically the signals I shared this week. Last Friday, I wanted to share also this SP500. I don't trade Fridays. I don't trade on Fridays, but it was the same thing. See, now I regret I didn't share that, but I just marked the levels. See, the price is bullish. The price is bullish, and we have a confirmation pattern. See, the trend line got broken, the supply zone got removed, then price reversed all the way down to the last bearish candle to the week. See, and then price went all the way up. That happened on Friday. See, it's all about finding direction. I know that if you apply or if you try to follow the same thing, if you follow direction using the weekly and daily time frame, no matter what strategy you use, I'm sure your results will get a lot better, because actually that's what define the order flow of the market, the weekly and the daily time frame. So that's what I have. That's what I shared this week. Now let me show you a couple of entries or possible setups I have for the following week, and I'm done for the week. I don't recommend to trade on Fridays. I just mark this one and see if the market respected this strategy, and it did. So what I have for next week, I have in yellow the pairs that are aligned. I mean, where the daily and the weekly time frame are in the same direction, and I have in purple the ones that are about to be aligned or might get aligned. So if they get aligned, I can look for opportunities. Okay, So let's check real quick. Well, gold is the same thing. Gold is the same thing. We have a support and resistance structure, so there is liquidity below here. I expect the price to make one more lower low, and this is the daily level. Here is where I expect another confirmation pattern, and if that happens, I can go long in the daily level. The CHF JPY, this pair is completely bullish. It's completely bullish, as you can see. All supply zones or resistance level get removed. And I have this CP level here. So the price can make a retracement for the next week all the way down, look for confirmation and go long. Same thing. Why? Because the weekly and the daily are bullish. 4 hour is bullish. We have these levels here. We can still use them. You can use them without confirmation. That's fine. But I always add confirmation. I always add confirmation to my entries because I avoid losing trades. I can avoid losing trades by applying confirmation pattern. Why? If I just place a buy limit here, price went down, makes a retracement, but ends up removing the level. This is a losing trade. I could have avoided by applying confirmation. That's why I always use them. Always. That's part of my trading strategy. Same thing for NCD JPY. It's completely bullish. The daily is completely bullish. It's about to make a new higher high. And we have these two levels. And we can expect the exact same thing. See what happens. See how you can use support and resistance, not to place entries in support and resistance levels, but to know where the liquidity is. This is a resistance level around here. This is a resistance level, so guess who's gonna buy if price retraces? If price retraces to this zone. Support and resistance traders, also Fibonacci traders. I don't use Fibonacci, I don't use support and resistance traders. I only use order blocks. If we add a Fibonacci here, see we are near 61.8, but that means liquidity below 61.8. So here's where the movement started. Here, this level took out this supply zone, so this is a high probability order block. But we have to wait for a confirmation. Now the NCD CHF is basically the same thing. See this example. I don't use structure. But the 4 hour time frame is in a bullish scenario right now. We have here a textbook structure basically. And if you use these concepts, you might say, this is your high, and if this high gets taken out, then the structure change. But actually, if you use supply and demand zones, the structure changed a while ago. Why? Because we have supply zones being removed. We have two. We have this zone being removed. We have this other zone being removed. And based on supply and demand rules, when we have two zones removed, we are in a trend already. Now the price is making like a triangle pattern. Some sort of triangle thing. But the price is already bullish. See? Aussie CAD. This pair is already bearish. It just turned bearish. Same thing. You might see this order block, and I've seen some people looking for buy opportunities, which is fine. but based on the way I trade, we are already in a bearish market because this level got removed, this level here, and this weekly trend line got removed. But the daily turned bullish for a little while. See? Why? This supply zone was removed. Okay, the supply zone got removed, so I was waiting for the daily time frame to become bearish again, and now it became bearish. This level got removed. See the wick here? This level was removed, and the daily trend line was removed as well. So now I am in a bearish time for in a bearish market, even though we are in a weekly time in a weekly level. I know people will start looking for buy opportunities. I'm sure they will start looking for buy opportunities because they have seen some this trend line broken. I'm sure they are looking for buy opportunities, but I'm looking for a buy for a sell entry because the daily time frame is now bearish. Now we have all this room from this level to this level to expect for a retracement, then wait for a confirmation, and then we can go short. I know it might sound like doesn't make any sense, but you can backtest this and you will find out it's true. Aussie JPY, it's the same thing. We are in a bullish market, and I have this level here, this order block. Actually, this was a signal I sent on the team. Now I remember. This was a signal I sent on the team last week as well. Why? Because the two levels here, this level was removed. This other level was removed here. We have another block on the 1 hour time frame, which is, let me look for the last bearish candle. Okay, here it is. My last bearish candle to the wick. See, price went, fill my entry, and the first TP was here because this is a support and resistance structure, so I know there might be people selling here, and the other level, the other TP zone was here. It's pretty easy, pretty simple. And again, what I like about this strategy is that it's very mechanical. It's very mechanical. Now, no, this one it's not bearish yet. EuroCat is the same thing. Bearish market. See the supply zone here. All demand zones being removed. See the daily level removed, trend line removed. We are in a bearish market now. We have this CP zone. So around here is where I'm going to look for sell entries next week. We can wait for a retracement, confirmation, and entry. And here we will have support and resistance traders as well, adding some liquidity to the equation. We have support, 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 support. So this is a level where they might be interested in getting in here. Euro NCD, this one is still valid. Price is still consolidating. We have support and resistance structure. We are in a bullish market right now because this is my daily demand zone and it's still fresh. See how the support and resistance structure has been created. So guess who's buying here? Support and resistance traders. So basically, if we had the opportunity to scan the market and see the liquidity, all the stop losses are below here. Here we have a stop loss cluster below that support. So if price makes something like this, a movement like this, I just follow my confirmation pattern and boom, let's go up. If price removes the support and just goes down, removing the order block, then I just don't do nothing. I do nothing. That's the reason why I always look for a confirmation pattern. Over and over again. Confirmation pattern will help you avoiding losing trades. Euro JPY is completely bullish. We have a clear view for the next week. So next week it's gonna be good because we have many pairs, many pairs that are already aligned, and many of them have broken this consolidation. So they want to keep pushing the price higher. So same thing. You use your daily order blocks, and you can allow the price to retrace all the way down to the daily order block. But if the daily order block gets removed, just ignore the pair. We no longer trade that pair. CAD JPY is the same stuff. See, this is a good example on why I don't use the structure. This is your last swing low. This is your last swing high. So we have another low here, and people was looking for I don't know, something like this, right? Using the daily time frame. But if you see the weekly time frame is completely bullish. See, completely bullish. The weekly trend line is still intact. My last weekly demand zone is still valid. Now I just needed to wait for the daily time frame to align. See what happened? Daily supply zone being taken out. We have this strong departure to the upside. Now I just need to wait for a retracement and then go along. USD CAD also is the same thing. It's completely bearish. The daily is completely bearish. We have this last supply zone. This supply zone removed this demand zone, so this is a very important level. We have support and resistance structure here. This is your last support. If price retraces, it's supposed to act as a resistance, so liquidity will be up there near this daily order block or daily supply zone. So for next week, what do I need to see? I need to wait for a retracement, confirmation, the same pattern, and then we can go short. So that's basically the strategy. Just 4 steps in a very mechanical way, using order blocks, using or supply and demand levels, plus support and resistance to identify where the liquidity is, so I can get a better entry. And for instance, I had this zone, this last pair. I didn't want to share this pair because the spread is pretty high. Dollar ZAR, the spread is crazy on this pair, so I just didn't share this one. But if you see, the weekly is completely down, it's completely bearish. The daily is the same stuff. This demand zone was taken out. When I go to the 4-hour time frame, see what's happening. We have a supply zone here, and on the 1-hour time frame, we have pretty much support and resistance structure. Resistance, 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 resistance again. People started adding liquidity. I mean, they were trying to get short around this zone, but the stop loss is up there, right at the order block. See? And price went all the way down. So it's pretty simple. It's pretty simple. The strategy is pretty simple. You can confirm if you feel like the 4-hour time frame is too much. to me it's fine. I get 3 to 7 entries a week, and I feel okay with it. But if you feel like the 4-hour time frame is too much for you, like you can wait that much, you can confirm using the 1-hour time frame. But be aware that, you know, if you use higher time frame, and if you confirm using higher time frames, you get higher probability entries. But yeah, you can confirm using the 1-hour time frame. So that was it for today, guys. I hope this helps. I hope you learned something new. Just keep in mind that I don't look for direction using the structure, but if you feel like using the structure makes you feel like safer, you can use it as well. As long as you look for direction using the weekly and the daily time frame, you can even go to the 5-minute time frame and look for the same patterns and apply the same patterns. And I'm sure your results will get a lot better. Do you guys have any question? Are we fine with the session? Okay, I think we're all good. Okay, guys, thank you very much for joining Forex Fitness, the _ laser and Fin Freedom 2020. Thank you very much for joining. Let's see if we can make another session, if you want, next week, so we can apply the same strategy and learn the strategy and master it as well. So thank you very much for joining, and see you next week, guys. Bye bye.